What's the best dividend stock to buy? Coca-Cola stock, Walmart stock, Clorox stock, or eBay stock? I'm going to answer which one of these dividend stocks is the best one to buy in this video. I'm going to compare these four dividend stocks across 5 different financial metrics, and I'll answer the question by the end of the video. So let's get started, beginning with the dividend yield. If we look at this metric, we see Clorox offers the highest dividend yield of 3%. Next comes Coca-Cola at 2.95%, followed by eBay at 2.08%, and finally Walmart at 1.6%. But remember, when you're investing in a dividend stock, there are two components to your total return. You get a dividend return or a dividend yield, and you also get a capital gain or a share price return, right? The price that increases with, well, I shouldn't say increases because the stock price doesn't always increase, but you typically, if you invest in a dividend stock, you hold it for 5 or 10 years, you'll get two parts. You'll get your dividend return and you'll get a stock price appreciation return, meaning the change in your stock price, whether it be an increase or a decrease. So this is just one component of your return as a dividend stock investor. The next metric I wanted to compare these four dividend stocks on is their annual revenue growth. And looking at this metric, Coca-Cola is in the lead most recently at 11.25%. That's because Coca-Cola has a greater market share in away from home channels. You think of restaurants, theme parks, sports stadiums like that. Coca-Cola has a lot of exclusive relationships with those establishments. Think about its deal with McDonald's, right? You're not going to see Pepsi at McDonald's, it's Coca-Cola. So as people are spending more time away from home now after the aftermath of the pandemic, Coca-Cola is benefiting from that trend. Walmart has done an excellent job throughout the pandemic and now in its aftermath. It's really connected with the way consumers want to shop, rolling out its same day services, the buying online and picking up in store. That's been a big hit with consumers, and the fact that Walmart is growing its offerings in terms of grocery is really helping attract customers that are now more than ever cost conscious. Clorox, unfortunately, is headed in the opposite direction, negative 3% growth in this most recent year. Of course, if you remember, Clorox was a prime beneficiary during the pandemic. Everybody wanted to buy those Clorox disinfectant wipes because we wanted to clean surfaces and then clean those surfaces again every time a person came within 100 feet of those surfaces. Now, the demand for Clorox's products have lessened and revenue is slowing. The same goes for eBay. It was a prime beneficiary during the pandemic as we wanted to avoid shopping in person. The online e-commerce and auction website thrived during that time, but now people are going out more often and they're shopping less online. eBay's revenue growth is slowing and at negative 6% in its most recent fiscal year. Longer term, I wanted to look at the company's operating profit margin over the trailing 12 months, and I wanted to look at this for the last decade. And looking at this metric, you could see Coca-Cola operates at an excellent profit margin, north of 20% for the entirety of the previous decade. The same is true for eBay, 24% most recently, but more than above 20% in the entirety of the last decade. eBay's business model, I specifically like because it's entirely asset light. It invests in the platform, in the website, in the app, and then it doesn't own any of the inventory on the website. It just brings together buyers and sellers and it takes a commission off of each one of those sales. That's a really good business model to be in if your goal is to operate at high profit margins. It may not be very good in terms of rapidly growing revenue, but it is really good in maintaining high profit margins, which I'm particularly attracted to. I like companies with good profit margins, elevated profit margins. I'm more attracted to that than I am to revenue growth. Next comes Clorox, which was doing really well, and it had a boom during the pandemic, but its profit margins have fallen and down to 9.98% as its revenue has been coming down. Simultaneously, its cost of goods sold have been rising because of inflation, because of rising transportation costs, and the combination of those two factors has really been bad news for Clorox. The profit margins have been nearly halved at 9.98%. Walmart's operating profit margin of 3.34% in the most recent trailing 12 months is not really something new. The company has been operating at thin profit margins. This is how it operates. It makes very little profit on the sale of each item, but it counts on selling that item over and over again to generate overall high levels of profits, even though the sale of each item is at a low profit margin. So Walmart is okay with that. That's the business model, and it's been really good at executing this business model over several decades. Next, I wanted to look at cash flow from operations to sales. I want to see how good these companies are at turning sales into cash flow. And again, our two leaders are Coca-Cola and eBay at 25 and 23% respectively, followed by Clorox at 13%, and last place is Walmart at 4.72%. So to decide which one of these dividend stocks is the best one to buy, I compared these four stocks across those several metrics, and now I want to look at their valuation, and I chose to use the forward price to earnings ratio. And according to this metric, Clorox is the most expensive at 36.97. Coca-Cola and Walmart are trading at similar valuations of 23, and the cheapest here is eBay at a forward price to earnings ratio of just 10.5. So if I was choosing one of these four dividend stocks to buy right now and hold for the next several years, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The one I would buy is eBay. eBay. The stock is the cheapest among these four stocks, and if we look at its long-term prospects, looking out 5 to 10 years, I like eBay's prospects in that time. Sure, over the next few quarters, it's going to be pressured because we all prefer going out more often and spending less online in the near term. But over the next decade, the overall percentage of spending is going to increase online, right? It's just so much more convenient to shop online than it is to go shopping in store. That tailwind is going to support eBay for the next decade, even though in the near term it might be pressured. And I like the asset-light business model. Like I mentioned, very high profit margins. I like that, and it's only at a forward price to earnings of 10.55. So eBay would be the dividend stock I would choose among these four. All right, that's all I've got for this video. I've hand selected a few videos that I think you're going to enjoy, so please click on one of those and I will see you over there. As always, thank you so much for watching.